New home sales in the U.S. Down 11.5% month on month. That was for the month of September, coming in below expectations. What's going on in the U.S. housing space? Jeff Taylor, he's the co-founder and managing director of Digital Risk. He joins us now from New York. We've had some kind of bouncy numbers over the past week, and it's best not to look them on a monthly basis, but we had starts up last week, permits down, existing home sales up about 5%, but now new home sales down 11.5%. What's the state of the U.S. housing market right now, given that kind of fluctuating data?
Well, you know, like you said, it's been bouncing around quite a bit over the last few months, but let's look at the new home sales. I think, again, that's directly tied back to the first-time home buyer. And the millennials are still not in the market in a meaningful way, so that number tends to decline. But you made a really good point about existing home sales. They're actually at the highest point, or the second highest point, since February of 2007. So as an overall housing economy right now, it's stable across the country, rising on the coast, being San Francisco, New York, and Miami. But overall, I think we have a healthy housing market right now.
You drew our attention to a Trulia study that says it's 23% cheaper to buy versus rent in the U.S. right now. That's an astounding number.
You know, it really is, and that's what a lot of these first-time home buyers just don't get. I mean, but it's because we've been at these interest rate levels for so long. This is an absolute incredible time to buy if you have any kind of line of sight to where you know where you want to live for the next 5 to 10 years. And the rents in the areas like the big cities, again, New York, Miami, are 23% higher because a lot of the first-time home buyers, the millennials that is, are chasing where the jobs are, so they're paying a lot more versus if they had a better idea where they want and took advantage of those historical low interest rates.
So does that support strong legs to the housing market over the next few years? As these millennials, that's going to be the big driving force, buy homes.
You know, I really think it does, and this next statement will be a little bit counterintuitive, but see if you will track the logic. As interest rates rise, you're going to basically see banks starting to loosen up the credit box a little bit and open up different programs that will bring, I think, people back into the housing market. One of the big challenges that we're still facing is at these historically low interest rates, banks are keeping a lot more cash in the balance sheet than they actually are going out and creating new mortgage loan products right now. So we're going to see, I think, from here going forward, continued rise of the U.S. housing market. Month to month is kind of hard to gauge, but on an annual basis, I think we have a very healthy and robust housing market, and the loans being made today are good to pristine loans, so I don't see any issues in the near future as far as any kind of a housing bubble or poor manufacturing defects.
How closely do you watch the quarterly GDP numbers, for example? Because they're kind of like the housing data, choppy. Third quarter was probably nowhere near as strong as the second quarter. How much does the economic backdrop affect housing sales? There should be a direct correlation, but what's your outlook for 2016 as it relates to housing, economic backdrop for housing?
So I think of GDP, it's a great correlation, right? Even if it's psychological, because the stronger the economy is, and all indicators in the U.S. are that the economy is getting stronger, we feel better about ourselves, we feel better about our jobs, and if we're going to make that once-in-a-lifetime purchase or that biggest purchase in our life, which would be a house, sort of that type of sentiment is what's going to get somebody to potentially get off the block and go ahead and make that down payment and make that first time that home purchase or that move up home purchase. So absolutely, I think the GDP is a great correlation to where we are as a country, and again, that's why I'm very bullish on the housing market going forward in 2017.
And when you look around the U.S., where are the strongest spots?
Well, the strongest points, I'll tell you where I live, it just seems like it keeps getting higher and higher. Miami, Florida, San Francisco, New York, but you also have a direct correlation to the workforce and the different things that are starting there. For instance, in the coast, it's tech. New York, it's the financial services. Miami's just become one of those global cities where people are just coming in from all over the world. So I think those are the hottest spots, the three that I would see right now.
And where are the weakest?
The weakest still is in the Midwest. It's where it's their housing crisis hit the most, where there's not the job creation that really has got people moving into those areas. So that's been the slowest rebound. Some areas of Texas I've seen are still only probably 15–20% higher than the bottom of the crash. So that's kind of correlation. End of the day, You follow the jobs, after people are going, household formation, and that really correlates to strong housing markets versus the ones that are still on a recovery.
And I guess finally, Jeff, we talk about it a lot up here, and you sort of referred to it a few seconds ago about coming from all around the world. How important is the immigrant population to housing in the U.S., whether it's wherever it's from?
I mean, it's significant, right? Because the more people who come to the U.S., really, many times they're going to start in that first-time homebuyer type marketplace. So for all the builders who we just had a bad month right now, that's really what's going to create more churn, more demand. The more people who come into the U.S., the more demand there's going to be for housing, whether it be rental or purchase. So it's a self-fulfilling prophecy. The more people that we have come and live in the States, the more demand for housing, the stronger that sector is going to be.
Jeff Taylor, thanks very much.
Thank you.
He's the co-founder and managing director of Digital Risk.